Welcome back to 3 Crypto Questions, a quick hit video interview series from Bitstamp where we take 10 minutes to catch up with top analysts, traders, and pros across the cryptocurrency industry. I'm your host, Ben Pausty. Joining me today is Nate Maddrey, Senior Research Analyst at Coin Metrics. Bitstamp recently partnered with Nate and the Coin Metrics team on a detailed report titled The Rise of Stablecoins, which we'll dig into today. Nate, it's great to have you on.
Hey Ben, thanks for having me. Excited to be here.
Awesome, man. Let's get into it. So on March 12th, the price of most crypto assets dropped over 50% alongside a broader drop in the global equity markets. Your report identifies this date as a turning point for stablecoins. So first question for you, how did March 12th crash impact stablecoins and change their trajectory?
Yeah, so March 12th was a crazy time for crypto assets in general for a lot of reasons. I think in hindsight, we'll probably see it was a turning point for Bitcoin and Ethereum, as well as maybe some other asset classes. But it had a couple of interesting impacts on stablecoins specifically. So first of all, probably the most obvious change is that stablecoin supply shot up to new historic levels. So for context, it took about 5 years for stablecoin supply to reach 6 billion in total. And then it took another 4 months for stablecoin supply to go from 6 billion to 12 billion, so to double. And that all happened after March 12th. Now that supply surge was led by Tether. Tether was already the biggest stablecoin by far, but Tether increased more after March 12th than all other stablecoins combined. Now the other interesting thing that happened with stablecoins on March 12th, if you zoom into the activity right on March 12th and March 13th, you'll see that a lot of stablecoins got thrown off their price peg. So as we know, stablecoins are supposed to stay stable at $1. But after that market volatility, a lot of the prices went above $1. And that has big impacts. Even small changes in price can have big impacts on the rest of the market.
Interesting. Yeah, I mean, so much has changed since March. I was just thinking back, and from a market's perspective, these shifts in trading behavior and demographics have been pretty incredible. And it's pretty clear that stablecoins seem to be right in the middle of the action. It'll be really interesting to watch, kind of how the rest of the COVID pandemic plays out in the markets. So moving on, let's talk Tether. So Tether supply has increased more than all other stablecoins combined since March. So second question for you, why is Tether growing so much faster than other stablecoins?
Yeah, so this has been a little bit of a tricky one, but I think it's related to what I mentioned at the end of the first question about how stablecoin prices went off their peg. So while most stablecoins recovered relatively quickly after March 12th, Tether's price stayed elevated above $1 well into mid-May, and has even kind of fluctuated above it since then. And notably, it stayed above USDC, PAX, HUSD, and most other stablecoins. So since Tether's price is basically expected to be at $1, again, given that it's a stable coin, when it goes above to $1, it creates arbitrage opportunities. And what I found in this report is basically that if you look at the dates when Tether's supply increased by a ton, it coincided with dates where Tether's price was above that $1 peg. So this suggests that arbitrage was essentially leading to this huge supply growth. And basically what's happening in kind of simplistic terms is if people are able to buy Tether at $1, either buy it off an exchange or mint new Tether, put $1 into the Tether reserve and then get USDT out, they can then go to exchanges where Tether is selling for more than $1 and sell that Tether that they just bought for $1 and make a quick profit. Even if Tether is just trading fractions of a penny above $1, if you do this at large enough scale, if you're printing billions of dollars worth of Tether, you can make a good amount of profit very fast. Another important thing to note here is that Tether has much higher liquidity and trading volume than all other stablecoins, as you kind of would expect. But this makes arbitrage much more attainable for Tether, and you can do it again in larger quantities.
And quick follow-up for you, Nate. Do you think any of the regulatory issues facing Tether will impact its standing as a top stablecoin?
Yeah, it's tough to say, but I mean, so I talk about this a little bit in the report, how Tether has had a lot of regulatory issues in the past. And actually just recently on July 7th, there have been new reports that have come out that said the Financial Action Task Force is now looking into Tether and other stablecoins more. Specifically, they're basically saying that Tether will need to comply with standards preventing money laundering and preventing financing of terrorism and some other stuff. So I think that it probably eventually will catch up with Tether. They just have too many issues to kind of keep dodging these bullets. But then again, I've kind of thought that for years now, to be honest, and they've still managed to get by. But yeah, I mean, especially I think if we see a big focus on KYC compliance, that could affect some of this arbitrage we're seeing and affect some of the factors that are causing an increase for demand, which drives that price, which we can talk about a little later. So I think if that happens, then yes, I think we'll finally start to see Tether coming down, but it'll probably still take a while.
Third question, what are the three key drivers of this significant increase in global stablecoin demand?
Yeah, so this is an important question. I know, like I said, the arbitrage opportunities are probably driving the supply growth, but in order to have those arbitrage opportunities, something needs to be driving demand, which is causing the price to actually be higher. So in the report, I lay out three key things. First of all is just a sudden rush to safety after March 12th. So since crypto prices dropped so quickly and dropped over 50%, we saw across all equity classes on March 12th, people just piling into safe haven assets. And for the most part, that was US dollars. Some people sometimes say gold and even Bitcoin are safe havens, but when everything is falling across the board, people just start piling into cash, basically. And Tether and stablecoins are kind of the crypto native version of cash. And that being said, even people who might normally be looking for kind of fiat currencies might have started converting some into stablecoins, given that there was kind of a global dollar shortage, especially for countries with weakening currencies compared to the US dollar. So that's the first thing, just rushing into cash, keeping money parked on the sidelines too, in case the price then shot back up. Secondly, is Tether is used particularly as a replacement for kind of a fiat gateway, especially in countries like China, which have restrictions on crypto trading, and it could be hard to take fiat and turn it directly into trade it directly for crypto. So what we've seen is that in Asian countries, stablecoins and Tether in particularly kind of increase when crypto trading increases. So since there was more volatility following March 12th, trading volume shot up in general. So a lot of that is probably kind of due to the fiat gateway. And past research has shown that Tether, specifically Tether on Ethereum, is mostly transferred during Asian market hours, which suggests that is happening a lot as well. Then finally, there's potentially increased demand for using stablecoins as a medium of exchange, which is something that has kind of been talked a lot about. It's a little hard to find data on it. But if you think about what are some of the most promising use cases for stablecoins, first of all, is just sending kind of cross-border payments, global remittances. You can use, crypto in general is great for that, but specifically stablecoins and Tether are good because of their, natural price stability. So I found a little bit of data to support this. If you look at the amount of Tether addresses holding smaller amounts, so basically $1,000 or less worth of Tether, those also shot up after March. So that suggests that, maybe individuals, retail investors, people who just wanted to use it as a medium of exchange also started getting Tether, as opposed to people who are doing it either for arbitrage or trading, which are probably more institutional type investors who are going to be holding larger amounts. So these are three of the factors. There are probably more, but combined together, these factors probably led to the increased demand for stablecoins, which then caused the price to go up, which then created the arbitrage opportunities.
I think the wealth preservation piece and the remittance piece has always been really fascinating to me with stablecoins, especially in this world where a lot of fiat currencies are struggling. Yeah. So, glad that you mentioned that. I think that's something certainly to watch amidst all of this. So now it's time for our Bitstamp bonus question. So bull, bear, or whale? Which is your crypto spirit animal and why?
At different points in my crypto career, I've kind of felt like all three. But right now I'm going to have to go with bull, I think. Crypto's in a good place, and I think we're getting ready for another bull run sometime soon.
I like it. A very optimistic answer.
Yeah.
And that's a wrap, Nate. Thanks again for joining us. Where can everyone find you?
So you can find me on Twitter. My handle is Nate Maddrey. And also be sure to check out the State of the Network newsletter, which is the newsletter I do for Coin Metrics, and that comes out every Tuesday.
Awesome. As a thank you for joining us today, we're going to ship you some Bitstamp merch. We'll ship you a hat and a Bitstamp Bull t-shirt to align with your crypto spirit animal. To learn more about Bitstamp, please visit bitstamp.net or follow us on Twitter, LinkedIn, and Facebook. Thanks for watching. See you next time.